Good morning, everybody. I'm just checking in this morning lives. This morning's live we're doing recorded. I have a little bit of stuff going on in the house right now. We've got a gas leak in the house, so I've got plumbers actively working, and I have to be accessible to them throughout the morning. But I definitely wanted to keep do some short lives or some short recorded, recorded videos throughout the day. And hopefully we'll be able to cover Kash Patel's hearing today live. That's at 2 p.m. Eastern. So quick story. CNBC, everybody else is reporting now. Inflation is hit up to 3.8%. Consumer prices rose 3.8% annually in May, the highest since annually in April, the highest since May of 2023. For all those what about folks who seem to want to, even in nearly 2 years into the village idiot Donald Trump's reign of terror, want to blame everything on Biden that he does incorrectly. When Biden left office, it was 2.7 or 2.9% inflation, just the month, and that was I believe that was in December, and that November. Fact check me on this. I might have my dates off by a month or two, but in that November we were at 2.4. But I think once the world found out that the village idiot had won the election and that he was going to be the president of the United States and impose all these tariffs, we bounced up to 2.7 or 2.9. Now we're at 3.8. That's saying something, right? That's the village idiot Donald Trump's tariffs, and that is this ridiculous war in Iran. Let me just read some of the reporting to you, though. Let's just kind of bounce this over. Prices that consumers pay for a wide range of goods and services increased at a faster than expensive pace in April, as another burst in energy prices raised further concerns about inflation's impact on the U.S. economy. The consumer price index rose at a seasonally adjusted 0.6% per the month, putting the one-year pace at 3.8%. The Bureau of Labor Statistics reported Tuesday we're certainly going to hit 4 by next month if this ridiculous war doesn't end, and it doesn't seem like there is any reason. I imagine we'll click up to 4.2, 4.3, 4.4. But if you continue to see an exponential rise in gas prices, I think those numbers could go exponentially up, and the May numbers could be astronomically worse. Maybe the village idiot will panic and pull the troops out and claim his fantastic victory before we get to that point, but that's where we're headed. Excluding food and energy, the core CPI increased by 0.4% and 2.8% respectively, keeping inflation well above the Federal Reserve's 2% goal. So forth and so on. The annual inflation rate was the highest since May of 2023 and was up 0.5 percentage point from the March core. Now, there's one other story I want to share with you guys before I wrap up this quick post. Treasury yields push higher. I'm going to tell you why this matters in a moment, but let's just read the reporting real quickly. Treasury yields push higher after CPI climbs to, that's the consumer price index, highest in nearly 3 years. U.S. Treasury yields rose again on Tuesday as investors assessed the implications of a surprisingly hot inflation reading, which showed consumer prices rising to their highest in nearly 10 years. The 10-year Treasury yield, the benchmark for mortgage lending, auto loans, and credit card debt, increased 3 basis points to 4.43%. The yield on 2-year Treasury note, which closely tracks short-term Federal Reserve interest rate policy, was more than 4 basis points higher at 3.989%. Now, there's a little more to that. A little more to that is to understand that that selling U.S. Treasuries, selling U.S. bonds is the way that the U.S. funds its debt. We don't have a balanced balance sheet right now in the U.S. We are 38 or 39 trillion dollars in debt. A vast majority of that debt is held by foreign investors, foreign governments, U.S. investors as well, and we make that money by selling U.S. Treasury bonds. The Treasury Department several times throughout the year has auctions where people and countries and investors, foreign and domestic, purchase these U.S. Treasury bonds. The thing about it is, in order for those Treasury bonds are how we fund our debt. If we don't continue selling those bonds and people run away from those bonds because they don't want to buy them, we have no way to fund our debts and we could be facing some sort of economic calamity. This almost happened after April 2nd, 2025, which was the village idiot's Liberation Day, if you remember. A story that was happening underneath the surface that wasn't publicized enough is foreign investors and foreign governments were dumping our debt and running away from it as quickly as they could. And that was terrifying for the government and for everyone who was paying attention, for economists, because if suddenly foreign investors, foreign governments stopped buying our U.S. treasuries and they started dumping those treasuries, nobody knows what would happen because we would have no resources to fund that debt. So it was really a scary moment when the village idiot sort of backed off 2 weeks later because somebody, although he's incapable of understanding this, somebody got to his ear and explained something to him that maybe this would be bad for him politically. And he put 145% tariff, which was laughable. It was basically an embargo on China, but dropped the overall tariff rate to 10% across the board on everyone. Things sort of leveled out again with the treasuries. But when we see these yields up at 4.43%, that's a very high percentage rate, which means that, the Treasury Department is forced to offer better terms, because the risk is higher. So they're offering, the value of a 10-year, if somebody buys a 10-year U.S. Treasury note that's going to mature, that they can cash out in 10 years, a 4.4% interest rate on that, that's what the additional money we have to pay them, is fairly high. And it's indicative of the fact that the Treasury Department is having to make these yields, these bonds more appealing because the risk is higher. So the indication also is that as the yield goes up, Treasury bonds become less safe. It's, normally when there's an economic downturn globally, or there's a global disaster or something, people turn to gold and they turn to U.S. Treasury bonds because the dollar is the most stable currency in the world. That's changing. Donald Trump has all but ruined that. And if we wind up in a situation where we actually have a mass exodus of buyers from U.S. debt, and we see these Treasury yields continue to go up and up and up because the Treasury Department has to keep making that debt more appealing to buyers because the risk is increasing, it's something to be concerned about. And I worry that one weird economic trigger, one unexpected economic bit of unanticipated strangeness which could happen at any time, that falls upon the U.S., especially with this confederacy of morons that are in charge of the Trump administration and running the Treasury right now. I seriously worry that anything could sink this economy, and we could suddenly find ourselves as the next Venezuela or the next Argentina or the next Turkey, and that would be bad. So just keep an eye on this, and we'll see what happens. But irrespective, we all feel inflation numbers going up. Now we're seeing the data. More later.